Okay, end of the week today, guys. Friday, up only 215. Pretty much flat all day. Um, Dividends came in today, so a little bit of cash. You can see that BHP paid us, Rio Tinto paid us, so that's 1 grand there. Northern Stars $90, AZJ paid us yesterday, 241, and Woodside did yesterday as well. So yeah, around about $1,500 in dividend. We still got another 2 grand to go in terms of dividend, and that puts us our available cash to 15,000 and our total to 165. All right, let's see how the market went today. BHP and Rio Tinto again started strong. Um, it, yeah, it fell short during the day, but yeah, Rio here is the one that I'm a bit gutted about because I could have had a re-entry at 114 after I sold my 160 shares. It's a shame I didn't buy back in though. I was a bit hesitant, thinking that it'll go a little bit lower, but in the back of my head, I wanted to buy back in. But anyways, what's said and done, opportunity cost. I could have doubled this. I could have had another $920 net profit. Nice, quick 10% there. QB is finally green. They're not sure if it's going to stay green. REE almost break even. The big disappointment today was obviously BVS. Can't keep going up. So I had a retracement. Finished on 258 yesterday, putting me at almost 1,000 or $1,020 profit. So over 20 something percent. So it dropped quite a bit today. Tilix is basically even worse before the news. It's $15 before the 20% jump, and now it's literally given back 20% in 3 days. So what's the deal with that? I'm not quite sure. TPG was trending higher, and around about it lost around about 10 cents or 7 cents today, 3 cents yesterday. So not looking great. But you know what? The market is actually negative. I'm doing better than the actual overall market because the market's, well, okay, well, I'm doing similar to the market. I was beating it earlier this morning. All right, so we're around 165 after all the dividend comes in. We'll probably finish on 167, so we're still around 4 or 5 grand short of the uh, ideal. But I'm really trying to get into Life 360, because apparently it's the trend right now. It's defying optics, is defying the market. It just keeps going up and up and up. It's just unbelievable. So the new plan that I had in my head, well, not the new plan, it's virtually the old plan, but I really wanted to see if I can execute it, is that I won't hold FMG all the time right now. I'm very happy with FMG. If it can get to $23, I'm going to exit another large proportion of 700 and something shares, locking in $10,000 profit, and then having only around about 650 shares in FMG, which means that it is up around about 80% for me, which means my average buy price will be down to $10, and I'm just going to hold that forever until I can see the monthly trend come down, or FMG has what we call, well, you never know, it might go up to 61.8 here and then start trending back down to the 200. It'll give me buying opportunities again around the $13, $14, and then I'll buy again. But to then, I'd rather have the money pulled together. That way I can trade and go bigger and take proper risk. The same with BHP. Too heavy on the materials. My goal is, if BHP goes to $48, no, 46, sorry, 46, I'm going to exit and I'm going to lock in 5 grand there. Rio, $28, I'm out. And then I'm going to wait for another buying opportunity because I think it's going to come here, make a triple top. Oh, no, that's 137. Who knows? It might make it back there, but I doubt it. So 128, they come back and then retest this line, and I'm going to go back in. Once I get a BBS, unfortunately, I'm not going to come back. I don't know. And then here, this is what I'm talking about. Trades like this. I'm hoping to make $3,000-4,000 profit on QBE, okay, overall, and then buy $5,000 worth of shares sorry, buy $8,000 worth of shares, then have $3,000 profit. So earning 5,000 of my capital and over 30% in profit. Therefore, my average buy price will be probably down here. You know what I mean? So it's a stock that I can comfortably hold forever, knowing that it's going to take really bad news for the stock to come back down, and then you never know how far it's going to trend. Just like, for example, Westpac, not Westpac, sorry, Wesfarmers. It can keep going and going for as long as it likes. At the end of the day, I'm going to be comfortable doing that, and the whole objective here is to eventually have around about 10, maybe 15, 20 tops companies that I really like to hold forever, and of an average of around about $10,000 in each, which puts out a $200,000 portfolio of pure profit eventually. Um, well, I would say, yeah, I'm aiming for 50-50. So if I make 100 grand in profit, then I have 100 grand in capital, and then I have plenty of money to trade after that, and then I can risk it on different stocks and stuff, and then eventually I'm going to build a portfolio with 10 to 20 quality stocks with approximately 10,000 of my capital in there, right? But then 10,000 profits, so it's going to be $20,000 worth of stock, and eventually get it to 30,000 or 40,000 if over time. And if another upcoming rising stock, I can take a stab at it. Well, that's the plan. It's going to be super hard to execute, but at the moment I'm not. I'm trying to make less silly mistakes, and the goal is to trade on a weekly basis minimum. I say weekly. I hardly see. It doesn't. The market volatility is extremely stable. So, for example, here on West Farm, as you can see here, how it whips you in and out. I wouldn't have entered here at all. Wouldn't hesitate, right? Mainly it's because you can see that there's no valid entry. Here is my very first valid entry. Okay, so let's say I bought West Farmers here at $70, and then 2 weeks later I'm down to 66, but then I got another valid entry here at 68.50. I would have bought again. Double down here, and then basically look. After that, it's just a no-brainer. I would have exited half a position here, so one of those trades there, then re-entered here. If that's it. Yeah, look how much I've saved. Like, hindsight is easy, but 9% drop. Anyways, everything in hindsight, I just need to get my emotion in check, and then stop jumping around from company to company. Just focus one at a time. I keep coming back to this though. Like, I know I want to, but I realize, what, it just moves too slow, the market. But having at least 20 or $30,000 in an ETF, it's going to be pretty good. At the end of the day, you're getting 8%, so it's not too bad. You're not going to get a lot of growth. The growth comes from the company, but the company fluctuates up and down or ranges, and then you might as well just have money in the ETF. So, yeah, I'll have some money eventually in these three. These three I've nailed down to the ones that I really want to hold over time. It's got strong liquidity, good dividend, and it's a broader market. FANG covers the most important US markets, and then Asia covers the top 50 Asian companies like Samsung, Alibaba, and stuff like that. Alrighty, not much to report today. That is the end of the week. Hopefully next week we have a better week. Hopefully we have a better week